How is everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to cover the top 6 compliance issues basically for 2024. Given that we're, still relatively new in the new year, figured it was a good time to kind of run through what these big compliance issues were so we can get a look at what are the main things that banks are going to be dealing with here in the early part of 2025. And some of these things, no doubt, will last throughout most of the year, if not through the entire year. But we will take a look at what we've got here. So this was a blog post that basically was put out by the ICBA, the Independent Community Bankers Association. And this is titled The Year in Compliance, 6 Notable Updates for Community Banks. Now, before we get into these, I want to read them off to everybody here, just give you a run through. So the first thing is FinCEN's beneficial ownership rule. The second thing is the CFPB's guidance on phantom opt-in overdraft agreements. The third thing is the FDIC's proposed rule on what's called for benefit of FBO accounts in bank-fintech partnerships. The fourth one is CISA, the Cybersecurity and Infrastructure Security Agency's additional cyber incident reporting rules. The fifth one is increased check fraud scrutiny for large banks. And the final one, number 6, is the combination of two things. It's the Community Reinvestment Act, CRA, and Section 1071 final rules. So now, while we have this article here, I could speak on a number of these topics because we've covered a whole bunch of these. I've covered a bunch of these on the channel already. So FinCEN, the BOI information, I've covered a lot of that. If anybody has watched any of the Strategy Room live streams, I've done episodes on BOI, but the important thing to know right now is that this is all on hold. There's been a lot of litigation. There's been a lot of back and forths, but ultimately an injunction has been filed against this and everything's been put on hold for the minute. So for the moment. So there's nothing for anybody to do. And basically all we can do is just sit back and wait to see how the courts rule on this and see what plays out. My hope is that this is going to get basically deemed as unconstitutional. It's going to get knocked down and it'll either go away or Congress will have to go back and have to either amend or put some kind of new legislation in place, which will counteract the CTA, the Corporate Transparency Act from 2021. So that's kind of the deal with FinCEN right now. So just know that BOI is out there. If you don't know about it, you really need to investigate it. Go look up some of the episodes that I put through on BNI on not BNI, BOI, and and just get some more background data on that. So the next thing, the CFPB, they put out this guidance on phantom opt-in overdraft agreements. So this is really interesting. So they basically put out a rule, and I'll read you here. So the CFPB in September published a circular to help federal and state consumer protection enforcers stop banks from charging overdraft fees based on phantom opt-in agreements, which is when banks claim they have customers' consent to charge overdraft fees, but have no proof they obtained that consent. So, however, nowhere in the underlying rule does it say that banks are required to get that affirmative consent in writing. So if a bank is asked to produce proof of affirmative consent and they're not able to, according to the circular, this would be a violation of the Electronic Funds Transfer Act and Regulation E. So obviously there's some issues there with this whole thing. I mean, obviously, I think that, getting consent from the customer would be a good thing, but then the rule doesn't say that you have to have it in writing, but but the bank can still get in trouble for it. So there's a big disconnect here in what's going on with this kind of phantom opt-in overdraft agreements. And, there definitely needs to be some more kind of guidance and direction on this. So, okay, number 3, the FDIC's proposed rule for FBO accounts. Now, I have actually covered this one very much in depth. I would direct everybody to go to episode, I can give it to you here in a second. Go to episode 291. It was called The Regulatory War on FinTech, Part 1. And I cover all this discussion in there on the FBO accounts. This all has to do with a company called Synapse Financial Technologies, which was a fintech partner of a number of banks around the country. It failed. $85 million went missing. and it's become this huge mess right now. So what has happened is regulators are looking at a couple of things there. Number one is the relationship between fintechs and banks, and how are banks managing that relationship? It's what's called a third-party vendor relationship. How are you managing it? Like, in other words, if a fintech fails, how are you dealing with that? What are you doing? Like, how are you basically monitoring or keeping tabs on that fintech? So that's one aspect of it. The other aspect of it is they want, for benefit of these FBO accounts, they want to basically, they want to track, or they want the bank to track, well, just everything with the transaction, like what's going on there. Like, in other words, how do you know where the money is, where it's going, what account it's going into? So there needs to be more, just tracking of these accounts and the flow of money and what's going on there. The third thing, so like I said, that basically gets to the heart of like what are called like the rules and the record keeping. The third thing is that regulators want to now classify these deposits. Like, if you're working with a fintech to take in deposits, they want to classify these deposits as brokered deposits. And that, that creates a whole nother issue onto itself. So, and I think these things should be separated out. I don't think, like, I feel like, part of the issue here is you've got three different things going on there. You got the managing the fintech relationship, broker deposits, and kind of the rule making and record keeping. I don't know if all three of those things necessarily need to be tackled at the same time in the same thing. I think you could do the rule making, and you could do the vendor management or vendor relationship thing. You could kind of do that all together. But as far as like the broker deposit thing, I think that's like a whole nother conversation. So we'll have to see. This is something that's going to unfold over, throughout the year, and we'll have to see like what happens here with this. Okay, next thing is CISA's, this additional cyber incident reporting rules. This thing is really vague. They basically came out and said like, oh, well, you have to, when you have a cyber incident, you got to report it to DHS, but but then it's about timing, and there's different timing for how banks report a cyber incident to the FDIC than the DHS. And the comment is in here. It says, we're hoping the DHS will work with our banking regulators to come up with one set of reporting requirements for banks. So again, it's kind of the same thing as the phantom opt-in. It's like there needs to be a lot more clarification around this issue for, when cyber incident, like what are the rules between these different regulatory agencies. And then we get the increased check fraud scrutiny for mega banks. Now, obviously, check fraud's nothing new. It's been out there for a long time. It's a huge issue in the industry, as it just kind of keeps getting a little bit worse and worse every year. Banks, the bigger banks, let's see here. It says regulators are placing extra emphasis on those banks' procedures for accepting and processing checks, particularly on the mega banks' fraud detection efforts. We're also entered into a partnership with the U.S. Postal Service to try to message some additional ways people can protect themselves when mailing checks. So a little bit more scrutiny there on big banks as it relates to check fraud. And then finally, the last thing is CRA and Section 1071 final rules. So all I'll go into on this one is this: the CRA is an interesting topic because you had a number of regulatory agencies that basically came in there, tried to make a bunch of adjustments to CRA, and it really muddied the water, so to speak. It really came out with these very vague rules that were going to become very cumbersome to banks around the country to try to meet these new standards, these new qualifications, if you will. And I think a lot of banks immediately pushed back on this and said, hey, look, this, first of all, you're trying to make this one size fits all thing for big banks and small banks, and that really isn't going to work. But furthermore, you want us to do now all this extra work and create all this extra compliance on stuff that's very vague and not, I think the point of the CRA is you want to make it impactful, right? You want it to do what it's supposed to do. And so therefore you need to have you should have some clear-cut guidelines as to what you want and how you want it, and make it, easy for banks to achieve those things. Not this kind of giant mishmash of rules and procedures that can't be quantified and are really difficult for banks to kind of comply with. So, and then finally, the 1071 rules. That is basically something that's been sitting out there. It was part of the Dodd-Frank law that was passed back in 2010. It was sitting out there for 12 or something years, and finally the CFPB decided to pick it up and run with it. And basically, all it's really saying is that they want banks to collect a lot more data and information on small business owners. That's really it in a nutshell. It kind of like what banks are already. The data points that banks are already collecting on consumers, now they just want it for businesses. There's been, again, a lot of pushback on this. Again, it's just one of those things. It's just more compliance, right? More compliance. This is never-ending cavalcade of compliance and procedures coming down the pike. But again, just something else that there's litigation right now around this 1071. But it's my guess is that probably is going to go into enactment, and banks are going to probably have to comply with that. So I don't know that they're really going to get around all that, but that's it. I mean, that's the big things on the horizon. The one thing that I would add to this list that is not here is open banking. I would definitely add open banking to this list. I think open banking is going to become a very big thing as the year goes on. If you don't know about open banking, like I said, go check out the episode that I did on open banking. Check out some of the live streams and stuff to get more information on that, because I will check out the strategy room live stream that I do, where I will, again, any new information on any of these topics that comes up, I will bring it forward. So, but with that being said, those were the big compliance issues as we ended 2024. Those are the issues that we'll be dealing with throughout most of 2025. So I will keep everybody updated as I get more information out there. But I will wrap this episode up by saying, if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I love getting back to everybody. And make sure to check out some of the other content on the channel, because I'm sure there are some things out there that you will like and find really interesting. So with that, I bid you all a fond farewell, and I will see you again real soon.